All right, morning everyone. Let's get going here. Another absolute non-event in U.S. equity markets last night. We literally just pushed sideways the entire day. That came on the back of a really good GDP number. Every piece of data that's coming out in the States right now, for the most part, is just fantastic. But other than that, there was very, very little that happened. We actually had some of the physical commodities, especially some of the more industrial commodities that came under pressure yesterday in the U.S. session. We had oil that was down over 2%, down to below 74 at one point. We had copper that came off, reasonably below the $3 mark, down to 296 and a half as we speak. The precious metals managed to kind of hang in there and actually traded up on the session, which is interesting. And what was also interesting was that we didn't see a whole lot of dollar strength after the third quarter GDP number. That's I don't know. I don't know if that's signifying we're getting closer to the end of the dollar strength, or if it just was totally, for the most part, expected. But either way, we saw very little happen in U.S. equity markets. We're getting to such low points of volatility at the moment. We're looking at the VIX at 12 and a quarter again, which is quite spectacular considering where it was only about 3 or 4 weeks ago. Right, in Asia overnight, pretty much no follow-through anywhere except for Australia. Australia traded really well. The miners really leading the charge there, I guess on speculation that Rio Tinto might get bid for by Glencore. I'm not exactly sure how that would work. I know that Glencore is quite significantly smaller than Rio, if I'm not mistaken. I also was under the impression that legally Glencore couldn't make a move for Rio until the beginning of the second quarter next year, sometime maybe in April, because of the fact that they've already made a formal offer and didn't come back with anything within 30 days, and they have to wait the 6-month period. But I could be mistaken. Anyway, market likes it. Maybe it just squeezed a couple of the shorts out of it, and some of the mining stocks there have managed to catch a boost on the back of it. Outside of that, not a whole lot going on in Asia. Like I said, the dollar didn't really show any strength. We didn't see any significant move in the dollar yen, so very little else going on. All right, now our charts of interest today. We've got another chart just really showing the divergence between the U.S. and Europe. And you can see the U.S. just absolutely flying since probably mid-2011 relative to Europe. The movements were totally in sync, I would say, from 2007 all the way through to 2011. You can see the market's literally moving right on top of each other, and now the divergence has just been quite spectacular, with the outperformance over the last 3 years being almost double what Europe's done. All right, in terms of corporate action today, pretty much nothing. Market data, we've got UK GDP coming out at 11:30, expected at 3%. We've got a lot of US stuff that comes later in the day, but that's it. We've got mortgage apps, durable goods, initial jobless claims, Chicago purchasing manager numbers. We've got Bloomberg consumer comfort, University of Michigan confidence, and new home sales. It's a big day for data in the US. But in Europe and elsewhere, there's very little going on. So, I think that obviously some of these data sets are pushed up today in the States because it is Thanksgiving tomorrow in the States, so the markets are going to be closed in the States tomorrow. Then we're going to see a half day on Friday. So, I was just speaking to some of the other guys in the office this morning, and unfortunately, the way that volatility has totally died down, and we're getting deep into the holiday season now, getting ready to move past Thanksgiving. Obviously things start to slow down after the first couple weeks in December. So, the likelihood for any significant moves that aren't news driven, between now and the new year, are just starting to get less and less by the day, it seems like. So, I think that's important to think about. We could continue to see a drift higher from here into the end of the year. So just be careful about that and cognizant on that. I know that targets on global equity markets are very benign for the whole year next year, and the numbers are very small. The returns that most of the analysts are projecting are very small going out to the end of next year. But I think you just got to be careful. We could see moves up to those targets by January possibly. So keep that in mind. All right, let's get into the maps. First thing that we're going to look at this morning again is the Aussie future. And what I want to look at here is, we looked at this yesterday. We talked about the big resistance level that's up here, 45,000 and change. But we've just been in such a tight range outside of that 2 days of volatility when we saw the real breakdown here, and then the next day we just ripped back up to the upside. So this morning we're kind of coming back up potentially above what was a little bit of support before. Obviously support became resistance, so we've popped up above that little range. Yesterday we traded in quite a narrow range after the morning session, and so I think that you've got to be careful here. With us getting through this level, maybe 45,180, I don't see any reason why we actually can't trade back up to the highs. And so I think that we've got to watch this one closely. And like I said, it's not convincing, but I think that's kind of what we're looking at the moment. If we look at Mediclinic has been consolidating in a bit of a descending triangle here, and starting to look like we can make a breakout here. If we can get above $96, I think we will be breaking out in Mediclinic, and don't see any reason why we can't go back above the recent highs. All of these pharmaceuticals and medical service companies, and anything to do with healthcare has just been spectacular. Probably best performers on the year, and every sell-off, every breakout is really been to be bought so far. So just watch out. When we get through 96, I think there could be some meat on the left on the bone there. All right. Now look at Steinhoff. Obviously, there's big moves yesterday in Steinhoff, big moves in Bright. Steinhoff looking to acquire a majority stake in Pepcor, 90% if I'm not mistaken. Steinhoff's really been in kind of a little upward sloping consolidation that broke out yesterday and broke out nicely. This is really the highest. 57 was quite a big. I actually think 56 was a level, and then 57 obviously is kind of the top end of that level. We tried to break out. We topped out at 57. We've gotten through all of that now, and there's very few closes above here. It looks like there's maybe three closes above this level, and I don't see any reason why this thing doesn't take out the highs and maybe finish the year close to the highs the way that we're looking right now. So. Just keep an eye on this. This is a convincing breakout. We were in this consolidation for a long time. We've broken out now. The market seems to have really loved this deal for Steinhoff and really hated it for Breit. You can see how much they hated it for Breit. You very rarely see stocks, selling these major assets and having that kind of reaction to it. That I don't think I've ever actually even seen that before. But the bottom line is, we came down. We got very close to what was major support in Breit at 65. If we do see some selling there today, and we get down to 65, that could be a bit of a line in the sand in the short term. You can see that that's definitely major support, and it's also right around the 200-day moving average. So just watch it closely. That could be a level to look to get involved in Breit if you're interested. The next one is Bidvest. It also came out with some trading updates yesterday, right before, not long before the bell, maybe in the last hour and a half. You can see we had hard selling from there. We're trading at 316 and change right before that announcement came out. It was kind of slow to react, and then it just got wicked there. We sold down about 5%. You can see we tested 300 on the nose. The 300 is obviously our major support level in Bidvest. That's as clear as it will ever get. We bounced hard off of that into the close. I closed it up about another $2 into the auction, but we kind of did get out of the range that we had been in. We closed outside that range. I really think that this thing could make a move back down to 300 today, at least. The commentary was very negative. I think this thing was overbought in the first place. So, I think you've got to watch this one closely today. I wouldn't be surprised to see it move back toward 300 after the market could digest this a little bit. And the last one we'll show is Tiger Brands. I'm going to show this on a 30-minute chart. And this thing is literally gone parabolic, and it's just kind of consolidated here. And there's a real level kind of right around where we are at the moment. If you can see here, I mean, obviously we got above this briefly, but there's a significant level, I think, at 378, and we've bottomed here the last couple days. So, we've had 3 or 4 days above 378 consecutively, making a bit of a, descending triangle, if you'd like to call it that, whatever, but some consolidation here between 390, 378. I think if we can hang on here and we can push higher, maybe get back above 380, this thing could make a move for 400 by the end of the year. I don't see any reason why it couldn't. And that's it for today, guys. Good luck out there.